We will then welcome you all to this session. Thank you so much for joining in. We are honored here today to have Mr. Paal Bjørnestad will join us later in the session, and the newly assigned Vice President for Private Sector in the African Development Bank, Mr. Solomon Quaynor. Please, Mr. Solomon, we're so honored to have you here today and looking forward to hear your presentation. So the floor is yours.
No, so thank you very much, Mathilde, and good morning, good afternoon to to everybody. As Mathilde did mention, I recently joined the African Development Bank as the Vice President for Private Sector, Infrastructure and Industrialization. And the reason I mentioned that is prior to joining, I feel I've been part of the family of the Nordic community because I was senior advisor to the IFU of Denmark. My mentor, Jyrki Koskelo, is from Finland, and his wife, Ritva, used to be the chairperson of FinFund. My former boss, Lars Tanell, is really from Sweden. And so I feel really a part of, the Nordic community. And I'm looking forward really to future partnerships with Nordic businesses, but also with the Nordic development finance institutions like Norfund, FinFund, Swedfund, and of course IFU. Thank you very much. Mathilde, you can go to the next page. Thank you. So this is an outline of what I'll try to briefly cover in the presentation, but the idea really is to leave a lot of time for Q&A, and I think the interactive session and the Q&A would probably be the greater part of our interaction today and not my presentation. Next page, please. Mathilde, next page. Next page. So you may all be familiar with the African Development Bank, but I just wanted to mention, a bit of the background of the African Development Bank. Even though we are the premier development finance institution or multilateral development bank in Africa, what people don't know is that we also have, non-African shareholders, of which the Nordic country own 5.5% of the capital of the African Development Bank. We are relatively well capitalized, and through that, relatively good capitalization, we actually go to the capital markets and borrow. We are AAA rated globally by all the key credit rating agencies, and we use that borrowing to lend, to both public sector and private sector. But the best way to describe the African Development Bank is we are a knowledge institution in terms of knowledge management, providing thought leadership. We also provide advice to both governments and private sector. And ultimately, we lend and we use our power to convene to crowd in investments, both for lending and also equity purposes. In terms of our commercial lending, based on what we borrow from the capital markets, we are able to lend to both public and private sector. And in the last normal year of 2019, we did lend an amount of $7.2 billion, in terms of commercial lending. But we do have two sister organizations within the African Development Bank Group that provide concessionary financing to governments, and primarily low-income governments and also fragile markets. And those, those funds are provided by the same set of shareholders, but in different proportions. And as you would observe, the Nordic countries even disproportionately contribute to that because they contribute about 10.5% to the concessionary funding that we provide to low-income and fragile markets. So overall, at least in the last normal year of 2019, we provided about 9 billion of lending, of which 75% was to government, public sector, and 25% was to the private sector. Next page. This page actually gives you a sense of the mandate of the African Development Bank, which is to spur sustainable economic development and social progress in the African countries, thereby contributing to poverty reduction. So clearly, there's alignment to realizing the UN Sustainable Development Goals. But if you were to ask me what are the priority areas that we focus on as an institution, I would say it's what you see on the right-hand side, which is to light up and empower Africa, to feed Africa, to industrialize Africa, to integrate Africa, and overall improve the quality of life of the people of Africa. But there's some cross-cutting themes that we look for, across these 5 priority areas, which would be the mainstreaming of gender. And then based on what I mentioned the page before, we look to support fragile markets, of which the most countries that would be described as fragile markets really occur in Africa. And then also we look to ensure that our projects are climate friendly. So these are the 3 cross-cutting themes. But let me use this opportunity on this page to give you a sense of the sorts of projects that we're looking for, and we're looking also to the Nordic community, to partner with us on. So if I could take the second theme of agricultural productivity, in Africa, we produce competitively several agricultural commodities, whether it's cocoa, cotton, etc. But there's a lack of value addition before export to other African countries or export to the West and to Asia. So, the industrialization types of projects that we're looking for, for partnership on, would be projects that add, value addition to these, to these competitive, commodity, agricultural commodities, and that would leverage the African Continental Free Trade Agreement to export and trade within Africa, but also would add value to be able to export, to other parts of the world, allowing, African production to actually participate more in these value chains, and also increase jobs and increase income, to private sector and also the African economy. And it's, given that there are 2 partners that, we have who are part of the, the organization of this conference, the African Finance Corporation and also the Maersk AP Moller family. They have a project called Arise, 2. Those are the kinds of projects that we're trying to support, and Arise 2 essentially is a company that actually looks to launch special economic zones across Africa, looking to create value addition to various agricultural commodity exports. So cotton to textiles, livestock to leather, cocoa to confectionery products, and these are sort of the the key projects that we would like to support as the African Development Bank. So integrated, industrialized projects, that actually provide the right utilities, whether it's power, water, etc., in a special economic zone, creates jobs, and also leads to greater industrialization in Africa. Next page. So we are uniquely an institution that does both public sector and private sector, and not just lending, but knowledge management and also advice. So we have a single balance sheet, unlike the World Bank and the IFC that have separate balance sheets. We have a single balance sheet. So we pivot resources, as necessary between sovereign operations and non-sovereign operations to deliver solutions, to our government and also private sector clients. So that's the message I wanted to give you from this page. Next page, please. So while my presentation would really focus on private sector, I just wanted to mention that, There are still opportunities also for Nordic contractors because we have, sovereign projects, especially in the infrastructure and energy area. And in those opportunities, any projects, funded by the African Development Bank, you can be assured are projects that will go through a comprehensive, competitive tender process. It's a process that we would even audit if we need to. And this is also where we are looking at the integrity of contractors, just to ensure that governments get best value for money. Thank you. Next page. Next page. Yeah. So in terms of private sector operations, our instruments, like I mentioned earlier, are diversified, between various forms of lending. So we do loans, trade finance, and guarantees. But where I see us going forward is it's really a greater focus on guarantees. And let me expand why. We would look to provide partial risk guarantees to offset and mitigate the risks, on infrastructure projects, energy projects that private sector are not comfortable taking and are not entirely comfortable with, just government guarantees. So we're going to support, government obligations through the use of partial risk guarantees. And then we'll be looking to use also partial credit guarantees to leverage and crowd in other financial investors. The idea here is not to rely on our balance sheet. We want to find a way to mobilize and crowd in debt investors as well. And there are several ways in which we would do it. We would do it, as mandated lead arrangers on projects, but we would also use our AAA guarantee to provide partial credit guarantees to bring in hopefully the Nordic pension funds, the Nordic insurance companies that want to really have a participation in the African development space, and want to do it really with a partner that they know is going to evaluate projects on the basis of the thoroughness of ESG on the projects. It's going to make sure that the integrity is a focus in terms of all contracting parties. And so, this is going to be our ethos going forward. It's not going to be reliance on our balance sheet. So we would like to do these transformational projects, but not necessarily just using a balance sheet, but rather crowding in other investors. And similarly, we would use that same concept of crowding other investors on the equity side. Right now, the only direct equity we do is to specialized financial institutions, such as the Africa Finance Corporation, where we're an equity investor, AfriExim, and also TDB. But otherwise, most of our equity is a small part of our business and has been indirect through private equity funds. But we're going to spend some time, looking to create, using our power to convene investors as well, looking to create some Pan-African equity funds where we crowd in, the Nordic pension funds, insurance companies, global investors as well. But in addition, we're looking to crowd in the African pension funds, insurance companies, and sovereign wealth funds as well. Next page. Please go on. Mathilde, next page. Yeah. So here, just wanted to show you that, based on the bank's portfolio, the bank is definitely strong on infrastructure in the areas of transport, energy, and water sanitation, which makes up 55% of the portfolio. And in the right top corner, you see a picture of a project that we did, the expansion of Walvis Bay in Namibia, the Walvis Bay port. And that was done in partnership with Maersk AP Moller. Next page. But when we take a look at where our experience has been the highest with Nordic contractors on the public sector side, it's been really in the energy space. And if you take a closer look, you see that was really high in 2016. The reason it's tapered off is more, this focuses on sovereign operations. My understanding is we've seen some involvement of Northern contractors, but in private sector energy projects subsequent to that. Thank you. Next page. On the private sector side, we've provided about $140 million of debt to Nordic businesses. We've also partnered with the Nordic development finance institutions to jointly support fundraising with private equity funds. And the bulk of our financing is really focused in three key areas, which are agriculture, energy, and health, as well as an emphasis on women entrepreneurship. Next page. Go on. So these are the areas where we see investment opportunities in Africa. I'm not going to go through the detail. It includes the energy, agriculture, and healthcare, which I talked about before, but also industrialization and transport. So clearly, these are areas where we see that Nordic companies have competitive or comparative advantage, and we'll be looking for partnership in that area, especially in the private sector, whether directly or through PPPs. Next slide, please. Next slide. Next one. So my concluding slide is also to indicate to you that we use our power to convene as the African Development Bank. We've established the Africa Investment Forum in partnership with several other parties, such as the AFC, TDB, Africa 50, Islamic Development Bank, EIB, etc., DBSA. And once again, this is a platform where Nordic companies can benefit. You have the ability to display your projects on this platform to find not only partners, or you have the ability to come to this platform to find opportunities that you can partner in. You also would have the ability to raise funding through this platform because a lot of the partners on this platform are looking to finance viable and bankable projects. And this is an example really of the ways in which we're using our power to convene to support inward investments into Africa. And the last page I have is just an indication. Next page, please. Next page. Is an indication of who to contact within the African Development Bank from a sector basis. But once again, we look to partner with the Nordic development finance institutions. A lot of them would be your first point of contact, and we are going to be proactively working with them. I've given you an example of the type of integrated projects we would like to also work on, and we look forward to potential opportunities for partnership going forward. Thank you very much.
Thank you so much, Solomon. And we see from the chat here that this presentation is very, very interesting. We will share this presentation afterwards with the participants, so that is said already. We got in a few questions here from our viewers. The first one is, does the AfDB support tourism projects?
Sorry, say that again.
Does the African Development Bank in general support tourism?
I can't hear you. You're muted.
Can you hear me now?
Mathilde, you keep going in and yeah, I can hear you now. Yes.
Does the African Development Bank support?
You've gone off again.
Okay. Can you hear me now?
Does the African Development Bank support what?
Tourism
yes,
projects.
I can hear you now. Tourism projects. Yes, we support tourism projects. We have exposure to airlines. We do have exposure to hotels. Of course, during this COVID period, those are some of the projects that have been highly disrupted. So we are working on those projects, in terms of proactive portfolio management. But in principle, yes, we support all projects that really contribute to economic development. However, the 5 priority areas I mentioned are really where we prioritize our resources.
Thank you. And then over to a question from
Mathilde, you keep going in and out.
Sorry.
Yeah.
Can you hear me now?
I can hear you now.
So over to another question from one of our viewers, Bill. Do guarantees extend to exporters of commodities and fresh produce from Africa? One of the major challenges is non-calendar after export.
Okay, so Mathilde, I'm really struggling to hear you, but what I've been able to piece together is if we support commodity trade finance. Yes, we do. And on the page in which I talked about loans and guarantees, in between was trade finance as well. So we do support, African banks, and we also support international banks to facilitate trade finance directly. In addition, this is one of the reasons we also invested in the AfriExim organization, whose sole focus is really to support trade finance. And we're one of the original equity investors in AfriExim, and this was done explicitly to support, trade finance with the rest of the world, trade finance within Africa as well.
Thank you. And over to you mentioned the Africa Investment Forum, where NABA participated for the first time last year, the second year of your forum in South Africa. Is there a question here from the viewer if Africa Investment Forum will happen this year?
So it's interesting. Whenever people ask whether the Africa Investment Forum would happen this year, what people don't realize is they're just referring to the event. The event we tend to have November in South Africa. However, the Africa Investment Forum continues to work throughout the year. And so if indeed, there are viable projects that investors would like to raise capital for, would like to, get potential joint venture partners, you can reach out to the Africa Investment Forum team. We can introduce you to them directly. And so it continues its activities, but to answer your question directly, clearly there would not be a physical event this year. And we've decided, probably it's best not to really have a virtual event because it's going to be quite complicated. But the activities of the Africa Investment Forum continue, throughout the year. And if indeed, the person who asked the question has a project of key interest, they should please reach out to us. And I did provide names at the end of the presentation. So on a sectoral basis, you could see who to reach out to.
And to repeat that, we will make sure to share the presentation.
Okay, so we're not set up. We're not set up to really provide core guarantees, but that's why we are the anchor really in the creation of the SAFER funds. Okay, so we are already contributing to that. So in areas where the opportunities are small, but are very important, such as renewable small scale opportunities. We have fund-like vehicles like SAFER, that have been set up to really support those types of projects. So that's how we support the smaller projects, not directly, but through platforms.
Wonderful. Thank you.
Okay, so I've seen the second question. How can Nordic companies be best prepared, before meeting with the bank? Once again, I think the same requirements of the Nordic DFIs would be the same as our requirements. And so if you're familiar, with the requirements, the main thing is we need bankable projects. We need clear business plans. We need to understand that, the investors have the equity necessary for the project because it's going to be capitalized with both debt and equity. And ultimately, we need to be sure that the ESIA work has been done. The business operates with good governance. So it's really the typical thing that private equity investors, commercial lenders, look for as well.
Thank you, Solomon. And
somebody's asking if we do refinancing of short-term loans to provide longer-term financing, which is better suited for a business. We tend not to do refinancings, as a principle, and it's really all development finance institutions. However, if clearly a company has been operating entirely on short-term loans and is going through an expansion, we'll look at a capital restructuring to fit the future of that business and may do an element of refinancing. But, if it's primarily a refinancing opportunity, then we're not best suited to do that.
fantastic. Here we have Mr. Paal Bjørnestad.
Oh, good. I can hear.
Yeah, good morning. I'm very sorry that I'm late. This is the third device I'm trying. I'm on my phone, so after trying my computer and iPad. I'm really sorry that it took me such a long time. I'm sure you are in the best of hands with Solomon, the VP. Thank you.
Yes, thank you.
No, thank you, Paul. Interestingly enough, I can hear you, but I cannot hear Mathilde.
I can be the translator.
Can you hear Mathilde?
Both of you.
Oh, please, that's great.
This is the beauty of technology. Mr. Bjørnestad, if you would like to just say a few sentences about what you do as an executive director in the African Development Bank, and also what role you can play for the Nordic companies listening in here today.
Yeah, no, thank you very much, and thank you again for inviting me to the NABA summit. I'm sure Solomon has told you about the bank already, but just to underline that we are Africa's own development bank. We are owned 60% by the African governments and 40% by non-African countries. So the African governments as shareholders of the bank have a strong interest in the success of the projects we finance. And as Africa's own bank, we also have a unique understanding of African societies and economies, and also access to decision makers at the highest level. And let me also stress that we are Africa's only institution that is AAA rated. There are not so many institutions or even countries that are rated AAA these days, only 10 sovereigns globally in the world, but we are then one and only African institution that is AAA rated. And that's to the benefit of Africa. Our owners don't require any dividends. So my job, so I'm one of 20 executive directors. I represent then the Nordic countries, Sweden, Denmark, Finland, and Norway, as well as the bank's newest shareholder, Ireland and India. So I'm a full-time board member. I'm there to promote the interest of the shareholders I represent. And as I said, our shareholders, they don't ask for any dividends, but that we use the capital and development aid as best as we can to maximize the economic growth and development on the African continent. So we want to see Solomon and the management, the board, we all want to see more Nordic companies selling goods and services to the bank, to bank finance projects. That should, increase competition and increase maximum value for money. And we also want more Nordic companies looking to invest in Africa to consider the bank as a financial partner. That should increase the quality and value for money of our projects. So obviously, if you're looking for financing, you will be not dealing with me. You won't pick up the phone and said, should we look at a project? Then you would deal with Solomon and his colleagues. First, if you have an agreement with Solomon and his colleagues, it will be sent to me and the other board members for approval. But I'm always happy to be a door opener for Nordic companies and try to put you in contact with the right people in the bank. And also, if you think I can contribute in any way, to be a discussion partner that can help to uncover the opportunities the bank might provide or discuss more broadly about African economic development. So I'm here, happy to answer any of your questions. We don't have much time left, but you know where to find me. So please contact me if you think I can contribute to creating a relationship with the bank. Thank you.
Thank you so much, Paul. And we will also, again, I will repeat for the new viewers that we will share Solomon's presentation, where in the last slide is the details of whom to contact in the bank. We got 2 more questions, and since Solomon is not hearing me, I will post the question again here, and then see if Solomon or Paul, either of you would like to, please, Solomon.
So Paal, I cannot hear Mathilde, so if you hear her, and it's a question to be directed to me, please, if you could repeat the question.
Said she will post it in writing, but she can also tell me, and I will convey it to you.
Okay.
So please, Mathilde.
So it's the one that I posted in the chat now. It's by one of our members that is asking what should the revenues of companies be to qualify for loans or support specifically within agriculture?
Yes, so Solomon, it's a question about the size or the revenue of companies in order to qualify for a loan or a relationship with the bank in the agriculture sector. So basically the size of the company.
Okay, so you know, ultimately we are lenders, so we focus more really on you know, the total capitalization of the company and the amount of lending, and whether the company has the ability to service the debt. Okay, so you know, it's difficult for me to define it really on the basis of revenues, but what I would say is that, you know, we tend to look at, you know, projects for which, you know, the amount that's being looked for from third party. Sorry, Mathilde, you're speaking. Okay, I hope. Okay. You know, so we look for project sizes, you know, probably north of $50 million, and hence, you know, when you're thinking about the sorts of investments that we will do, it's going to be probably 20 million and up from a lending perspective as an institution, and we only do about a third maximum of you know, of the lending. So I would say that we're looking at project sizes, you know, 50 million and north, if it's agriculture. But I'll take you back to the example that I described, you know, where we are being more selective. We don't want to do small projects. We're not saying we're going to use our balance sheet solely on these larger projects. We will look to crowd in investors. So we're looking more for those larger transformational projects where we can contribute. We also support financial institutions to support smaller projects. So we don't have to directly support smaller projects. So it's not intended to discourage small agricultural projects. It's just to say we're not the appropriate direct, you know, partner for small agricultural projects. But this is where we work with financial institutions, and increasingly we're going to provide what we call risk-sharing guarantees. In other words, those guarantees are only relevant to the financial institutions if indeed they want to support agriculture. And we would do that on a pooled basis, not on a single project basis. So that would be the better way, you know, to support smaller projects. But for larger projects, we would look to, you know, we would look to support those projects directly. But once again, we're very focused on really crowding investors in. And that's why I spoke earlier about the fact that we'll be pivoting more from, you know, maximizing the loans we provide to using guarantees to crowd in other lenders, and then also through being MLAs on these transactions, bring in parallel lenders or lenders through A and B syndication process.
Thank you, Solomon. 2 final questions from our viewers. I don't know if Paul, if you will convey the questions to Solomon so he can hear them, but it's first is from Bill here that is asking what are main challenges faced by the AfDB when it comes to financing projects in Africa. And then we have one from Innovation Norway in South Africa, which is actually showing an example. They are working with a Norwegian company in the water and sludge management sector, working mainly towards the public sector. Can they discuss this with you? The floor is yours now.
Yeah, the last one I didn't fully get. So that was from the Norfund, you said, in South Africa.
Innovation Norway.
Innovation Norway, sorry. Okay. Yeah, so the first one, Solomon, I will give to you to what are sort of the major challenges for AfDB financing operations in Africa. So I will assume both what are the major challenges facing African companies and AfDB operating in Africa.
Okay, so the challenges are what we call bankability. When you think about AfDB, maybe the best examples I can give would be on infrastructure and energy projects, because these are areas that dominate our business. It's really the bankability of those projects, and bankability spans several different areas. It's going to be related to the market opportunity. Is the market opportunity there for private sector to take on the entire responsibility, because the capital costs are huge? If not, they may look to governments for support, okay, because they're not sure that they're going to be able to get the entire market size. So this is where we sometimes have to provide what we call viability gap funding, okay, because private sector is not ready to take on the enormous capital needs of infrastructure projects without either a traffic or revenue guarantee or a PPA that has tariffs at really tariffs at cost reflective levels, and also really has an element of profitability as well, because otherwise it's not worth the opportunity for private sector. Then some of the other reasons are the environmental and social assessment of the projects have not been thoroughly done, and we don't want to participate in projects that are going to negatively impact society as well. So those are some of the issues. Then some of the other issues relate to the integrity of the sponsors. I mean, are these people we can work with? What have they done to get the opportunity or to actually make their money in the past? Is integrity an issue? And once again, I'm just being honest that these are some of the reasons we end up declining projects as the African Development Bank. But once again, it's what I would call taking a look at the superimposition of various risks that are not well covered. And that's why project preparation on the infrastructure side is critical. Whether you're doing it as a developer, whether you're doing it as, a DFI support in project development, the project development process has to be, thorough. The risk allocation has to be to the party that can best manage the risks. And these are some of the reasons why, some projects do not really reach bankability, and, we as the AfDB are not able to fund the projects.
Well, thank you, Solomon. And the last question is from Innovation Norway, that is agency to promote Norwegian businesses abroad, particularly small and medium-sized companies. And the question is, we are working in South Africa with a Norwegian company in the water and sludge management sector, working mainly towards the public sector. Can we discuss this with you?
I mean, yes, definitely. You can discuss it with us. But the primary party you should be discussing it with would probably be the municipality, would be the municipality or the government counterpart that issues contracts really around those projects. Because ultimately, for us, governments have to prioritize and request support in particular areas, and those would be defined in what we call the country strategy paper. If it's not been prioritized, through that process, it's really hard for us. To support it. But conversations can happen, and we can, if indeed it fits with a country strategy that for South Africa, we've agreed with the government, then we can actually introduce you to the right government party. But just remember that every process the government goes through has to be a competitive process. Yeah.
Thank you. Over to you, Mathilde.
Thank you.
Yeah.
For the newcomers here, we had some issues with the sound, so we are finding new ways of collaborating with no sound and with sound. But thank you everyone for joining this session. We will make sure to share the presentation from the African Development Bank in our resource hub for the webcast. And thank you so much to both Solomon and Paal. We are very, very honored to have a great collaboration with you and look forward to bring even more Nordic companies that can partner with the African Development Bank. So thank you so much for joining, and thank you to Solomon, a little sign language here. And see you all in the virtual cafe until the next session starts 10 minutes past 1. Thank you, and bye-bye.
Bye-bye. Thank you. Thank you.
Right, bye-bye.
Sorry again for being late.
I didn't hear a thing, but thank you very much, Mathilde, and please convey our thanks to Evan as well. And my last message is that we would like to proactively work with Nordic businesses, particularly in partnership with the Nordic development finance institutions. And one has given you a sense of really areas of partnership, and you also know who to reach out to based on the names and contact details that I provided. And we look forward to converting these conversations to meaningful business partnerships going forward. Thank you.
Thank you so much. Bye-bye. We look forward to see you here in Oslo when it's possible.
And yes, I look forward to being in Oslo next year. I see your message down there. I look forward to being in Oslo next year. Thank you.
Thank you. Bye-bye, everyone. See you in the virtual cafe.
Bye-bye.